Hey everyone, welcome to Breakout Wednesday for the 31st of May 2023. It is currently about 3 p.m. on the West Coast, 5 p.m. on the East Coast. First of all, remember this is not financial advice. I'm not a financial advisor. This is simply a video blog on how one trader sees a market, and everyone needs to take responsibility for their own decisions. All right, now, had a big down day in the market today. We've returned back down to support and, definitely kind of heavy selling across all sectors. Now, I just want to quickly rattle through just three stocks from last week. They're all kind of getting hammered, to be honest with you. Aristocrat's fallen back into its base. Actually, WTC, I wanted to talk about this base back here, which I stupidly sold half of when it rallied up here a bit. I forget where. I've still got the rest of it, though. This is a classic mistake, right? I can't believe I made it where I trimmed half of one of my best positions because of, the market was showing a bit of signs of weakness and I thought it was going to fall over, and I thought I knew what was going to happen in the market and I didn't. If I just held to my plan, stuck to my plan and kept my entire position, I would have, be up a lot on that. But anyway, at least I didn't sell all of it, so still riding that sucker, and it's, that one's going well. But the KMD one has not gone well. It's broken back into its base. So, hit and misses out there on the new trades from last week. But definitely having a lot of success in the US trades, which I'll run through in a sec. At the moment, we have, bull and bear markets going on. A bit like last year when we had a vicious bear market in NASDAQ and tech stocks. It was a bear market, obviously. I'm just going to clean this up a bit for everyone, right? So, let's just put it on a line chart. So, last year we had a huge bear market, down well over 20%. But the NASDAQ and tech stocks are back in a raging bull market, okay? There's no way around that fact. For those who missed the signals and these flush out things back here that I was crapping on about week after week, you've missed out on massive opportunities to make money, all right? There's been some huge moves, and I think there's most likely going to be some huge moves continuing, and I think obviously the money to be made right now is concentrating on tech and tech-related stuff, okay? There is a bear market forming in a lot of resource companies that were hot all during 2022, are now kind of getting hammered. Like if we flick back to a candle chart on BH, there's this big descending triangle type pattern. I'm an investor in BH, so this isn't pretty, but if the technicals play out on this, we're going to have a move down to BH, to challenge these lows back down here. And I don't really like talking, hokey pokey shit like that very often, but I don't really kind of use targets from patterns that often, but this is just pretty black and white. I don't really care if it goes down there because I'm just an investor in it, and this thing pays huge divvies and all that sort of shit. But but we definitely, the point is we are showing signs of severe weakness in certain sectors and severe strength in others. Okay, and for my job, primarily in the trading account, is to make sure the majority of my cash is in stuff that's going up, okay, which I've been doing lately for those who listen in a lot of these tech stocks that I've been trading, okay? So that's enough. One of my biggest positions other than Apple is gear, and obviously that had a big down day today. So we'll see what happens. If it goes down and falls back down here to 20 or whatever, I'll probably just get some more of gear, but that's enough. The NASDAQ and all the correlated ones, I've crapped on about Hack a lot, how it was flushing out here and then rallied and then came back, and that's obviously taken out new highs, and obviously Hack, CLDD and the NASDAQ, NDQ are pretty closely correlated. It's kind of like if I own all of them, right? And it's kind of like I just have one position. If I had a gun to my head and I could only take one tech ETF for the rest of my life, 100% it's just going to be the QQQs, 100, NASDAQ 100, because it's got the biggest exposure to the best companies and the biggest companies, and I think that there's such an aversion to trading these big companies like Google with the average punter out there. They don't want to know about it because it's too large cap and they don't think it can move, but I think I've proven on here time and time again that it doesn't matter what company it is. It doesn't matter if it's $1,000 stock or a 10-cent stock. If there's shit going on behind the scenes and real fundamentals and growth and sentiment drivers, these things can move. And to me, it's all about this setup, okay, and the fundamentals behind the stock and all that sort of stuff. But it's really that if that setup's good enough, I'll just take it and and just go for it, And so that's a bit of a roundup of what's going on. I'm doing really well on my tech positions. The Apple trade, new high last night. The Google trade, the NU position, and a bunch of others. Okay, I'm not going to run through them all, but I'm still heavily long, especially in tech, and and there's no way around it. My long-term investments in miners are going to probably take a hammering over the next month or two, but it's all cool. Okay, I'm prepared for that. If I was trading this, I would have been out of it already. Okay, because it's got clear signs of breaking down. Okay, that's enough. Now, I'm looking at some new stuff. VVA, they announced a share buyback. Okay, I talked about this stock 2 weeks ago in detail. I'm not going to repeat myself other than I love share buybacks. Okay, and if you don't get what a share buyback is, view it a bit like, this is a simplification, view it a bit like the opposite of a cap raise. A cap raise is literally, for those who are new, this is going to be super boring for those who understand this shit, which is most of you, but view a cap raise as you've got a company, they don't have enough cash in the bank to fund what they're doing, fund their business, whatever that business is. Therefore, they go to the market and say, hey, we're going to create some extra shares, we're going to dilute the company, we're going to sell those extra shares to suckers, and then we're going to sell them a dream, and we're going to go off and spend their money and dilute the company. The issue is obviously is that if you're a long-term shareholder on that company, and let's say hypothetically you own 10% of the company, they go dilute the shit out of it, then suddenly you might only own 7% of the company. You didn't do anything wrong, it's just that the company isn't that good and they have to keep raising money because their business is shit, or because they're just starting out, and a lot of companies during that early process have to raise cash. That's just the way of the world. It depends what phase it is. And some companies have been raising cash for decades, and obviously just shit businesses. But there's others that just need to raise cash, most great companies do at the start. They need money from somewhere, and so they raise it. Now, a share buyback is the opposite. Warren Buffett, he loves share buybacks. Okay, you should just Google Warren Buffett share buyback if you don't understand it, and just read all about it. A share buyback is literally kind of the opposite. It's a company that has all this free cash flow, and they think to themselves, shit, I don't have a great, place for that cash right now. There's no clear other businesses to buy, or there's no clear investments to make. Therefore, when the share price is down, in their opinion, it makes kind of sense to just buy some of the outstanding shares at market, especially on down days or when the price swings down. Okay, and therefore the company's buying it, and it's literally doing the opposite of a dilution. Okay, everyone's getting more of that company because the shares can get cancelled and blah blah blah. Right, and so I love companies that do share buybacks. It's just an example of a great use of their money. And it generally helps their share price. So VVA has announced one over the next 12 months, and there's a lot I like about this stock, and this is going to be incredibly patient, okay, on this, but I will see how that unfolds over the next year or two on VVA. Okay, the other stuff I'm watching is just some of these bank stocks in the US that got absolutely spanked, obviously during all the crap that's gone over the last few months, are showing signs of a bottom, and it's really easy to run into these as they're collapsing and buy way too early. I think the smartest thing is just to wait for them to base, and I think some of the good banks over there are probably offering us some cheap prices. But I'm just waiting for legit buy signals, okay, on these. And so maybe Bank of America will give us one. There's a bunch of others. I'm not going to run through them all, but I'm definitely casting my eyes and just thinking, gee, if we can get a rebound in some of these stocks, then a 20, 30, 40% rally can happen quite quickly, okay? There's a bunch of other ones out there that I'm keeping my eye on, but anyway, that just I thought worthy of discussion. On the ASX, I'm just looking at stocks that held up well today because the market got hammered, looking for stocks that did not get hammered. And, you know, corporate travel, CTD, is one of them. Now, I don't, you know, my order isn't in on that yet. I'm just going to watch it a bit, but I like the gap up here. I like that it's held it, and I like that it didn't get sold down today heavily and aggressively on big volume and all that stuff, okay? Let's say the market has a bit more weakness, but CTD does not. It just holds this pattern, and then at the end of that kind of market sell-off, it starts turning off and breaks out, then I'm going to be all over it, okay? Other one I'm watching, and this is ages away, I think, is FHE. For those who were around last year, I was trading FHE when it was breaking up here out of these awesome setups back there. But it's kind of just been basing for a while now, and this is a gigantic sideways base and in a good sector. And obviously the mining is just having a little downturn with the majors, as I talked about later. But I need to find the mining companies and the material stocks that are just basing sideways, and then when that kind of mini bear market's over in BH and all that sort of stuff, then I want to find the ones turning up out of bases, okay? And so FHE is on the watch list. It's another one, MMS, traded this a lot over the years, but MMS is just basing up here and just really, really tight action. And I'm just waiting I'm just watching that, okay? So it's a huge sideways base here for ages, right? Poked its head above it, didn't really go on with it, and now it's kind of forming a really tighter handle. So I think that's worthy of watching. And there's a few others along the same lines. RWC, just basing here, really tight, all the moving averages pointed up, okay? And the other one was SIQ. Too many stocks here, I can't trade them all, right? I'm like pretty heavily exposed to the market with my NASDAQ positions and Google and Apple and all that bit. I will be taking some of these. These are kind of the main ones in my watch list right now that I'm sharing with you. I'm just going to be watching all these unfold and taking the best ones, all right? If I'm happy and completely happy that, you know, they've dried up with volume and they're looking good for me to risk my money, all right? The only other thing before I piss off is there is one thing I do pretty rarely, but I do. Let's say, for example, right, I want to add some BH. It could be anything. It has to be it has to be a very, very, very liquid stock if you're going to do it on the ASX. It's easier to do it on the US markets, but let's say Wesfarmers, right? Let's say I own a bunch of Wesfarmers in my self-managed super fund, which I do not, but let's say I did. Let's just use BH as an example, because I actually do own it in the self-managed super fund. So let's say I wanted to buy more BH. Let's say I wanted to buy it at $39. Okay, that's an arbitrary number. I just plucked it out of my ass. Okay, there's a few things I can do. I can put a limit order in at $39 and just see if it ever gets hit. There's another option, right? I can sell some puts. Okay, just Google sell puts. It's a ridiculously stupid thing to do, selling puts, unless you actually want to own that stock, that company. Okay, and then it can be a smart thing to do, because let's say I'm happy to buy BH at $42. And I say to myself, shit, it's just breaking down out of this ascending triangle. Do I really want to buy it at $42? What if it comes down here to $35? So I might go shopping on a big down day and see if there's some puts that I can sell at $37, okay? Each contract you have to, is for 100 shares. So you have to get a bunch of contracts sometimes, depending on your size. And then if it does race down to $37, I've got the option to buy those shares at $37. Okay. If it doesn't, let's say it stays above it, then I earn premium on it. Okay. And the premium is all built into that options contract. This is going to be gobbledygook for a lot of people, but it's really, really, really simple. Just do some Googling and research it. And I do like selling puts if there's a company that I 100% want to own for the long term, and I already own a bunch of it, and I don't give a shit if I get filled, because if let's say that the Dow's down huge tonight, 2 or 3%, this thing's gapping down tomorrow, then there's going to be some great puts that you can sell at some awesome premiums. Okay, And so I might just grab some. I'll see how low I can get them, but I might just grab some puts at $36 or $37 and just say to myself, shit, if it falls to 36 or 37, I'm just going to, I'm happy to buy another, however many B8 shares at that price. Okay. And I'm happy to sell those puts. Okay. Remember, I'm not buying puts, I'm selling puts. Okay. Very different things. But if it doesn't hit it, if it comes down here to 39 and gaps up the next day, I'm going to collect premium on it. Okay. And I just get to bank some free cash. It's something I do. I just thought I'd bring it up. It's something new to talk about. It's good fun. It's really, really, really risky if you're just selling blind puts. You had to be pretty much an idiot. But if you already own it, as I said before, it does make some sense. And I love doing it. I've done it for a long time, and I'll continue to do it, and it makes sense. But you really need to know what you're doing. Don't you? If you just blindly sell it, you're just going to get your absolute, rectaled in, the amount of time until you get completely rectaled. Okay, I'm going to piss off. Take care, everyone. Catch ya.